Hey everyone, it's Keisha from KD Investing. Let's talk about 3 easy ways to make money in the stock market, even if you're a beginner. The stock market can feel overwhelming at first, but the truth is you don't need a finance degree, a Wall Street job, or even a ton of money to start making serious cash. By the end of this video, you'll know 3 simple, proven ways to build wealth in the stock market, whether you're looking for quick profits, long-term gains, or passive income. And the best part, anyone can do this. So stick around because this might just be the most valuable video you watch today. All right, let's get into it. The first way to make money in the stock market is through dividend investing, aka getting paid just for owning certain stocks. A dividend is when a company literally pays you money just for holding their stock. Think of it like a thank you check for being an investor. These payments come quarterly, monthly, or even annually, and they can add up big time. For example, let's say you buy 100 shares of a company like Coca-Cola, KO. Right now, Coca-Cola pays a dividend of about $1.84 per share per year. If you own 100 shares, that means you'd get $184 per year in passive income without doing anything. If you reinvest those dividends, your money compounds over time, growing faster and faster. And some companies increase their dividends every year. These are called dividend aristocrats, companies that have increased their dividends for 25 plus years straight. Some of the best ones include Johnson & Johnson, J&J, Procter & Gamble, PG, and McDonald's, MCD. So imagine you own thousands of shares in dividend-paying stocks. You could be making hundreds or even thousands of dollars every month just from dividends alone. Some people literally retire on this strategy by building a dividend portfolio that pays them enough to cover their living expenses. And the best part, dividend stocks tend to be stable and less risky because these companies are usually well-established, profitable businesses. Even during market crashes, many of them keep paying dividends. So it's an amazing way to create passive income and build wealth over time. Now, if you're looking for something faster, let's move on to strategy number 2, swing trading. Swing trading is when you buy a stock and hold it for a few days, weeks, or even months to profit from short-term price movements. You're not day trading, meaning you don't have to sit in front of a screen all day. You just find a stock that looks undervalued, buy it, and sell it when the price goes up. Here's a real-life example. Let's say a stock like Apple, AAPL, is trading at $150, but due to some short-term fear in the market, it drops to $135. But nothing has really changed about Apple. The company is still massively profitable, iPhones are still selling, and they're still dominating the tech industry. So what do? You buy the dip at $135 and wait. A few weeks later, the stock bounces back to $155 or $160. If you bought 100 shares, you just made $2,000 to $2,500 in profit in a short time. That's the power of swing trading. And here's the thing, stocks move in cycles. They go up, they pull back, they recover, and they repeat. If you learn to recognize these patterns, you can profit over and over again. Now, the key to successful swing trading is to focus on strong, well-known companies like Apple, Microsoft, Tesla, etc., stocks that are temporarily undervalued due to news, earnings reports, or market fear, using stop losses so you don't lose too much if the trade goes the wrong way. Some traders do this on the side and make an extra $500 to $2,000 per month. Others turn it into a full-time income and make 6 figures or more just by catching big swings in the market. Now, let's talk about the third way to make money in the stock market, something that most people don't know about but works extremely well, selling covered calls. This is like getting paid rent on your stocks. If you already own shares of a stock, you can sell call options and collect instant cash payments from traders who want to buy your shares at a higher price. Let me break it down in simple terms. Let's say you own 100 shares of Tesla, TSLA, at $200 per share. That's $20,000 worth of Tesla stock. You like Tesla, but you wouldn't mind selling it if it hit $220. So you sell a covered call option at $220, and a trader pays you $500 upfront for the right to buy your Tesla shares at that price. Now, two things can happen. One, if Tesla stays below $220, you keep your shares and the $500. That's free money. Two, if Tesla goes above $220, you sell your shares for a profit and keep the $500. Either way, you're getting paid, and the best part, you can do this every single month to generate consistent income from stocks you already own. Imagine doing this with multiple stocks: Apple, Microsoft, Nvidia, Amazon, each paying you hundreds or even thousands of dollars per month. That's why some investors live off covered calls, treating it like a monthly paycheck. It's one of the best kept secrets of the stock market, and once you understand it, it completely changes the game. So let's do a quick recap. Dividend investing. Get paid just for holding stocks, build long-term wealth, swing trading, buy low, sell high, make quick profits in weeks or months, selling covered calls, collect monthly cash flow like rent on your stocks. All three of these strategies work, and you don't need millions to start. Whether you're a beginner or experienced investor, you can use these to build wealth, create passive income, or even replace your 9-to-5 job. So, tell me, which strategy are you most excited about? Drop a comment below, and if you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss out on money-making tips. Thanks for watching, and I'll see you in the next one.